Well, good evening, class. This is Professor Reynolds. I just wanted to drop a short video in here and talk about what we've done so far. Last week was the first week, so we had a discussion. You looked up articles on three different entities: a nonprofit, a government, and a profitable business venture. You also had a problem set on Wiley Plus, and I think that gives you an idea of what is to come. The Wiley Plus problems are extensive. I have provided examples of the problems, and I encourage you to use them. As I mentioned last week, you read the materials, you look over the sample problems, and then you do the work. If you look over the sample problems, that really should guide you and give you um, the ability to complete the problems correctly. So this is week 2. Which means that by the end of this week, we'll be 25% of the way through the course. As I also mentioned last week, this course does go by quickly, so it is essential that you keep up with the work. Some of you did not complete the Wiley Plus problem set last week. I will mention this several times, but all points count. So if you didn't do the problem set last week, you can still get 90% credit if you complete it by this Sunday at midnight. This week, we're going to be expanding our knowledge of purchasing another company, of a parent buying a subsidiary. There are assignments in Chapter 3 and 4, and also Chapter 13. In Chapter 13, we'll cover segment recording, and there will also be an assignment there where you'll do a paper. You'll look over the problems at the end of Chapter 13, and you will determine what is the appropriate get. You'll also have another problem set, and this will prepare you for next week where your first project is due. We're talking about when a parent buys a subsidiary, there are going to be 3 different situations. The first is if you buy something for less than 20%, so you really don't have control or influence. When you buy a company for less than 20%, it's just like buying an investment. And at the end of the quarter, you're going to value that investment um, by looking at what the market price of that investment is, and you will be making an adjustment to unrealized gain or loss. So your investment will fluctuate with the market price of your investment. Any dividends will be recorded as dividend income. The second situation will exist when you buy 20 to 50% of a company. In this case, you have significant influence. So you'll be using the equity method of accounting. In the equity method of accounting, you would debit your investment account for whatever your initial purchase price was for the investment, the implied value. And then you would record all the net income from your investment, and that would increase your investment account based on your percentage of ownership. So if the subsidiary made $100,000, you own 40%, you're going to record $40,000. When you receive dividends, those dividends are actually going to be a debit to cash and a credit to that investment account. So the investment account is going to increase based on the earnings of the company and decrease based on the dividends. The earnings of the company is what you would be able to record on your books. The last situation is going to be when you buy more than 50% of the company, so you have controlling influence. In this case, you're going to have to consolidate. Now, you've read about the consolidation, of course, and in this case, you are going to put the companies together as if they're one company. You'll run across what's called partial equity and full equity. So when you buy more than 50% of a company, the parent company is still going to be using the equity method or some form of the equity method to record this on their books. When you do the consolidation, it's not actually journal entries that you're going to be making. You're going to be using a worksheet, and that worksheet is going to take into account everything about this consolidation. So you're going to net out the stock accounts and the retained earnings of the subsidiary, and that really should be equal close to what your investment account is. So they're going to cancel each other out. The partial equity, you're going to do just as I suggested if you owned 20 to 50%. So in other words, any increases in earnings are going to increase the equity or the investment account. Any dividends are going to decrease that. Now you've got to take into account these and basically back those out. Now that would be the partial equity. The full equity would take into account if there was any increase in the market value of these assets that you've acquired. And so you're going to be marking those up and there'll be additional depreciation. In the full equity, you're going to be debiting or crediting your investment account again for that depreciation. So that would be the full equity. But remember, this is all on the parent company's books. And when you do consolidation, it is not actual journal entries, it's just keeping a work paper so that you can make it look as if this company was combined. You have to exclude any intercompany type transactions. So it really truly would be um, if they were one company. So if the parent company had a receivable in the books for 50,000 to the subsidiary would have accounts payable in the books for that same amount, and those would cancel out. So you would not add the receivable to the books, and you wouldn't add the payables to the books. As I said, the other project that you'll be doing will be concerning the um, footnotes. So you're going to be looking to see, what footnotes are required, looking at those to see in which situation I would add a footnote. And then you would use the FASB to determine basically the FASB guidance on that. So that should take you through the end of this week. On Wednesday, as usual, I will put out a sample problem set for the next Wiley Plus sample or problems. And again, I encourage you to use those after you've read the material. There are also some other material that they recommend you read. One last note, if you have issues with getting to chapter 13 in previous ETL models, there was a problem with the link, but you should be able to get to the book via another ways. For instance, by going through chapter 3. And then just scroll down and go to the chapter 13 and go to the appropriate section 2-5, and that should provide the information. So happy Halloween. Have a good week, and let me know if I can help.